Welcome back to the Daily Crypto Roundup, where we break down everything that's happening across Bitcoin, Ethereum, XRP, Solana, and the wider crypto market, and we do it in a way that actually makes sense. Today we've got a big one. We're talking about whether the Bitcoin bear market might finally be nearing an end. Solana flashing serious technical weakness with bearish engulfing candles and a potential move below $80. XRP activating its new permissioned decentralized exchange, and what that really means for institutional adoption. Ethereum's so-called 50% staking milestone, and the backlash over misleading supply data. And Goldman Sachs CEO David Solomon admitting he owns a little Bitcoin, but is still watching it closely. There's a lot to unpack here, and all of it connects. Let's start with the market itself before we dive into the stories. Bitcoin is trading at $66,257. Ethereum is at $1,948.11. Binance Coin is $610.56. XRP is $1.42. Solana is $78.86. Tron is 28 cents. Dogecoin is 9 cents. Bitcoin Cash is $510.56. Cardano is 26 cents. And Monero is $333.25. Those are your core levels. And remember, these prices matter not just because of the numbers, but because of what they represent in terms of psychology. Markets are emotional. They are driven by narratives, and today's headlines are feeding directly into those narratives. Let's start with Bitcoin. There's a growing argument that the bear market may be nearing its end. Some analysts are pointing to the scale of the correction we've already seen. We've had multi-month drawdowns. We've seen heavy liquidations. We've seen ETF outflows. We've seen retail sentiment hit extreme lows. Historically, those are ingredients you find late in bear markets, not early in them. The argument from the more bullish side is simple. Bitcoin has already absorbed a brutal correction from its highs. Long-term holders are still holding. On-chain metrics show that coins aren't moving aggressively to exchanges. Funding rates have flipped negative multiple times, meaning traders are leaning short. And when everyone leans one way, markets have a habit of punishing that side. But here's the counter-argument, and it's important. We have not yet seen a clean structural shift back to higher highs and higher lows on the higher time frames. We have not seen a decisive reclaim of major resistance levels. Volume has not exploded on breakout attempts. In other words, we have signs of exhaustion, but not confirmation of reversal. That distinction matters. Late bear markets feel exactly like this. They feel boring. They feel heavy. They feel like nothing is happening. But they can also fake you out. They can bounce just enough to convince you it's over, only to roll over again. So the real question is this: are we in accumulation or distribution? If we're in accumulation, then the smart money is quietly buying while retail is distracted or discouraged. If we're in distribution, then rallies are exit liquidity. That's the tension in Bitcoin right now. Now let's move to Solana, because this one is flashing much clearer technical signals. Solana recently printed bearish engulfing candles on the daily chart. For those of you who don't live inside candlestick patterns, a bearish engulfing candle happens when a large red candle completely swallows the prior green candle. It's a sign that sellers have overwhelmed buyers. It's not subtle, it's aggressive. And it happened right around a key resistance zone near $90. That matters. When price rallies into resistance and then prints a bearish engulfing pattern, it suggests that the rally was rejected. Buyers tried to push through. Sellers stepped in with force. Now the critical level below is the $78 to $80 support zone. That's where previous demand came in. That's where liquidity sits. And if that level breaks cleanly, the probability of an accelerated downside move increases significantly. Here's the bigger picture with Solana. The long-term fundamentals remain strong. Developer activity remains high. The ecosystem continues to grow. But short-term price structure does not care about your long-term thesis. It cares about liquidity and positioning. If Solana loses $80 decisively, the chart opens up for a deeper correction. That doesn't mean the project is dead. It means markets move in cycles, and sometimes you have to respect the technicals, even if you love the fundamentals. Now let's pivot to XRP, because this story is more structural than technical. Ripple has activated its permissioned decentralized exchange functionality on the XRP Ledger. This is not just a small update. It's part of a broader institutional strategy. The idea behind a permissioned DEX is simple. It allows verified, KYC-compliant participants to trade on-chain within controlled environments. In plain terms, it's DeFi with guardrails. Institutions don't want fully anonymous Wild West liquidity pools. They want compliance. They want identifiable counterparties. They want regulatory clarity. A permissioned DEX gives them a pathway into on-chain markets without abandoning compliance frameworks. That's big from a narrative perspective. But here's what's interesting. The price didn't explode on the news. XRP stayed range-bound. It printed indecision candles. It showed no major breakout. Why? Because infrastructure upgrades are long-term catalysts, not instant pump buttons. Markets want flows. They want real capital moving. They want volume. The permissioned DEX is like building a new highway. It doesn't mean cars are driving on it yet. It just means the road is there. Now let's talk about Ethereum, because this story touches directly on supply narratives. There's been a lot of noise about Ethereum reaching a 50% staking milestone. The headline sounds dramatic. Half of all Ethereum staked, half the supply locked. But analysts pushed back hard on that framing. The key issue is this. The 50% number refers to cumulative deposits into the staking contract since launch. It does not necessarily represent the actively staked Ethereum currently locked and unable to move. When withdrawals were enabled, Ethereum could exit staking. But the deposit contract balance doesn't automatically decrease in a simple headline-friendly way. So the more accurate measure of actively staked Ethereum appears to be closer to around 30% of circulating supply. Why does this matter? Because supply narratives drive valuation arguments. If investors believe half the supply is permanently locked, they may argue that Ethereum is becoming ultra-scarce. If the real number is materially lower, then the scarcity narrative is less extreme. Ethereum's staking model is powerful. It creates yield. It incentivizes long-term holding. It reduces liquid supply relative to total issuance. But precision matters. In markets, exaggeration eventually gets corrected. And now, zoom out. Bitcoin potentially nearing the end of a bear cycle. Solana flashing short-term technical weakness. XRP building institutional infrastructure quietly. Ethereum wrestling with staking narratives. And then you have Goldman Sachs CEO David Solomon stepping onto the stage and saying he owns very little Bitcoin, but he's watching it closely. That statement may sound small, but symbolically it's huge. For years, major Wall Street leaders were openly dismissive of Bitcoin. They called it speculative. They called it a bubble. They called it useless. Now the CEO of one of the most powerful investment banks in the world admits he owns some Bitcoin personally. Not a lot, but some. That shift in tone is not trivial. It signals that Bitcoin is no longer being ignored. It's being monitored, studied, understood. He didn't say it's the future of finance. He didn't say Goldman is going all in, but he also didn't dismiss it. Traditional finance doesn't move fast. It moves carefully. It moves when regulatory frameworks allow it. It moves when client demand forces it. We're seeing tokenization conversations accelerate. We're seeing stablecoin infrastructure being explored by major banks. We're seeing ETF products normalize Bitcoin exposure for traditional investors. The skepticism hasn't disappeared, but the outright hostility has softened, and that's how adoption happens. Slowly, then suddenly. Now let's bring this back to you, the listener. If you had $100 to allocate today, where would it go? Would you put it into Bitcoin, betting that the bear market exhaustion signals are real and that accumulation is underway? Would you buy Solana near support, accepting short-term risk for long-term upside? Would you allocate to XRP, betting that institutional infrastructure eventually translates into real liquidity flows? Would you stake Ethereum, earning yield while waiting for supply narratives to resolve? These are not simple decisions, but they're strategic ones. Markets reward patience. They punish emotional reactions. Right now, the market environment is cautious. It's not euphoric. It's not collapsing. It's in that uncomfortable middle ground. Historically, that middle ground has often been where the best long-term entries are made. Not because it feels good, but because it feels uncertain. As always, this isn't financial advice. It's analysis. It's perspective. It's context. The market right now is a chessboard. Bitcoin is testing patience. Ethereum is debating supply mechanics. Solana is testing support. XRP is building quietly. Wall Street is watching. The next major move won't be obvious in advance. It never is. But if you understand the narratives, if you understand the structure, if you understand the psychology, you put yourself in a position to react intelligently instead of emotionally. Stay sharp. Stay disciplined. Zoom out when everyone else zooms in. Drop your thoughts in the comments, smash like, follow, and as always, we will see you at the top.